One of the most dangerous things about selling options is their success rate. I know it sounds counterproductive, but you can get lulled to sleep with a great success rate and let a small loss percentage wipe you completely out. Let's talk more about it. Greetings, and salutations to all my brothers and sisters out there. I hope today finds you well. We're back outside. The weather's changed, thank God, finally. But we're here today to talk about options honestly. And I know that it's so popular and it gets a lot of clicks whenever they tell you what your great percentage you win in with options. They tell you how much money you can make. And hey, if you just need a little weekend money, sell a put, sell a something, and you can just have instantaneous money. They make it sound so wonderful. And all these gurus, the same ones that are charging you $10,000 and $5,000 to get their picks. Please, God, do not give these people that kind of money. It is absurd. But anyway, they're telling you, options are so easy and you have such a great win rate. An 80% win rate sounds fantastic. And actually it is, except for the fact that you can have a 60, 70, 80, 90% win rate and have that 10% come and wipe out in your entire gains. Options is a very dangerous way to play the stock market. It is very tricky. It is very risky, as with anything investing. I mean, I'm not a financial advisor, but I'm here to tell you that you can lose all your money quick in the market, because these people in the market trade with billions of dollars every day. What chance do we have? I mean, they can run us over without even noticing they run us over. So you have to understand, options is a great way to get into the stock market, to trade the stock market. But if you don't know what you're doing, or if you get lulled to sleep because you've been doing so well, you can absolutely get wiped out. Wall Street is full of tombstones with people who thought they were doing great, who thought they were a genius, and then when the market shifted, all of a sudden they weren't such a genius anymore, and they were back to work, or they were back to side hustles, or they were in a lot of trouble, or lost tens of thousands of dollars. Trust me, I've seen it. I've been a victim somewhat of it myself. You can get in there and you can get into selling all these naked puts, or we'll just use naked puts, and you can get in and not even notice. You may have 35 underlyings on and with multiple positions under each one of those, and have 70 kind of options running at the same time, and all of a sudden you've got 8, 10 naked puts running across the boards in different ways. And all of a sudden, whenever that market takes a huge shift, 2 to 3% down, it's really going to sting. It's going to hit you hard. It's not going to be 2% down in your portfolio. It's going to be 20. And whenever that happens 2 or 3 times in a row, you could easily lose 70, 80%, if not all of your account, basically. You could get wiped down to whatever you've got, straggling around. I'm telling you, we always preach the buying power. We always preach keep that buying power strong. And this is one of the main reasons, because if you get hit on a position that you're too stacked on, it's going to cost you a lot of money. If you go down 2 or 3% in the SPY, it is easy to predict that your portfolio could be down 30, 40, 50% just from that 2 or 3% move. If you've got the wrong kind of plays on and the market moves against you, you are in trouble, and you're going to get underwater. Your buying power is going to go into the negative, and then when that goes into the negative, you're sunk. You're done. You can't make moves. You can't roll options that you should have already rolled. You can't do things that you should have already done, and now you've got to start selling off things at the worst possible time, most often at a loss, and now you're really in trouble. Now you're taking a loss on top of a conceived loss, and if it happens 2 or 3 times in a row, I can tell you that it can wipe out 60, 70% of your portfolio in no time flat. Two weeks, you could have your portfolio destroyed by just a simple move in the option. And it doesn't have to be an actual move. It's just a conceptual move down. They have to protect themselves. They take more of your buying power. You go underwater, and all of a sudden you just have to make choices that are not the most pleasant ones to make, and you're going to lose a ton of money. So do not let any of these so-called gurus and people on YouTube or whoever or wherever you get this information from, let them tell you that option strategies are a great strategy and they're safe and you just make this extra money, and be flippant about it, because you can absolutely lose your ass on selling options. And buying options is an even riskier venture. That's why they don't even talk about buying options, because buying options is incredibly risky. You can easily get wiped out in buying options. So understand that options looks sexy on the outside. It looks good in the window, but it comes with risk. There's no free lunch going going on. There's no gimmies without a gotcha. There's no, heads without a tails. There's no this without a that. You have to understand it is very, very risky. Now, on the other hand, I do sell a lot of options. Yes, it is one of the main things we do here on this channel. And if you do it right, it can be a lucrative and a great and fun trading way. See, we watch all these people make trades all day, boom, 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 and we think, that's the way we need to trade. But over here in our little account, that's not the way we need to trade. We need to trade very few trades. I mean, for our size. We should trade according to the size of our account. If they're trading an account that they work for a firm, you're not going to match that. You don't want to be sitting there trying to make them trade for trade. Put on 2 or 3 trades a day. It's perfectly fine to put on 0 trades in a day if things don't line up. You're always looking for your A setup. And don't get bored because you have no A setup and start settling for B and C setups. And the next thing you know, boom, the market moves, your portfolio moves in a terrible way, and you can't recover from it. Or it's going to take you months, if not a whole year, to recover the losses that you have. Perhaps more. There's been many people that have completely destroyed their account and have to start over from this very thing, from just getting too confident. And it's okay to get confident. It's okay to be confident, but just don't get too arrogant about it. Say, okay, this strategy works, but you just can't assume that strategy is always going to work every time for the rest of your life. Understand, things move, things happen. Don't get lulled to sleep. Stocks have, news come out. They have different things happen that instantly can change the whole dynamic of what's going on with your move. So don't be fooled. Options is a very risky way to get into the market and play it. It's very safe to buy stocks, but you know what? There's a risk of that too. There's a risk to everything you do. If you have a chance to make money in some way, shape, or form, there's going to be a risk side to it as well. And that's that risk of just the general play. The specificness of your option play can be a risk too. Let's stick to that example of a naked put. Well, if you're running a naked put, or if you have a naked put inside of your play, such as in a strangle, and that stock goes way down, you're getting put to stock. You can bet it. And normally that's okay. But there are times you're going to get put a stock or being threatened to put a stock at a 20% under what your strike was. So now you've got a stock that's way in the money. You're not going to be able to run those nice covered calls on that. You're not going to be able to, just absolutely wheel that around. And you're stuck with this stock and you have to make decisions about it. And you have to be prepared for that too. Now you've got money tied up in that stock that's way underwater, and it could take that stock months to come back. Sometimes it takes weeks, sometimes days, sometimes it kind of takes years to come back. If you look at Nike and Disney and a lot of these, they dropped and they're still not back. So understand, when you get put the stock, if it's way underwater, you have to make decisions on what your play is going to be about that as well. And even if you start running the covered call, there's a risk there as well. Your risk on a covered call is that you miss all the upside. Now this is one of the least amount of risks that I point out, because you can still run that and catch the upside even if it goes up, and you also miss all the downside if you don't own the stock too. So yes, you may have risked, you put on a covered call, you've risked it to not get all the upside, but the upside, you may have missed out on $5 a share or whatever the case may be, and you could have missed out on a chunk of change, but you know what, we can keep in those options on that stock and catch back up to it. So trust me, there's been many a stock that's ran, and I'm about ready to give you an example of a stock that's going to fit all this criteria, that's ran and ran and ran, and I've owned a stock a couple of times, but I've kept right up with it monetarily, even though it's been a great running stock over the course of a couple years. So, do not underestimate how dangerous stock options are. Do not underestimate how much you can get struck whenever these things go against you. Just because you have an 80% win rate, excellent. You know that the strategy works, but understand, you can't let those losers run. You can't let those losers just hang out and go to a full loss. You can't operate by hope or I wish or I think. Defend these positions before you get into trouble. Roll these positions when you're 2 weeks out, 3 weeks out. If it looks like that stock's going down, then just go ahead and roll it. Don't even question it. Be mechanical about it. Don't put in your 2 cents, because as soon as you start putting in your 2 cents, you're going to lose both of them. So keep that in mind, that options are risky prey. They are fun, they are great, and once you get the hang of them, they are a great way to trade the market. But don't underestimate getting too lopsided in one kind of position. Don't underestimate getting lopsided on one side. It can absolutely destroy your account. So keep that buying power strong. And let's take a look at a stock that I think is a good example that you can look at for your own decisions to see what you think about it. Friends, let's talk about APLD. APLD, which we've mentioned here before on the channel, is a really great stock. I've been hanging out with APLD since it was about $5. I think I got put the shares somewhere a couple years ago at about that strike price. And with that, APLD has ran from $5 to $50 to $40 to $30 and all over the place. And this is a great example. I got my calls taken away, my shares taken away whenever on my cover calls, and got back in on puts, and I've done Jade Dragons. I've done everything, strangles, you name it. And all the time on this stock, it's just a great premium stock. It remains a great premium stock. Rarely does it dip into a low IV environment to where it doesn't have a high premium. Now, high premium involves high risk, but you know what? If you want to put it out any risk, that's how you're going to get paid better. So keep that in mind. So in APLD, they have kind of niched them way into a market in this AI data center build out to where they lease the property and the power to whoever wants it. They have the ability to generate it all, and that's kind of the long and the short of it, but they've got a really great market, and they were strong before this kind of happened. So they've really done well for themselves from a Bitcoin miner into a really powerhouse of what they are today. And APLD has been up to $50 this year at a share price, but it has fallen back down. It's somewhere around that $30 range today. They were having a decent day, and I think they were falling off though. So anyway, $30 is an outstanding place from where it has fallen. It has steadily declined to a place to where it was about in the April highs before the pullbacks in April. And since then, it just continued to run from that point. Now, that's a great marking place for me in my own personal taste. But this is a great example how we are getting a stock that has had a big pullback. It is reaching a base. It is finding a place that I'm comfortable with. That is one of my judgment calls, the line in the sand, to where I believe it'll bounce off of and not go much lower than that, if at all. So we have a good place and a good judgment call to put in our puts. I personally will be placing, in full disclosure, I'll be putting on some naked puts in that. I already have one running at $30, which is, is a little bit underwater, I think, right now, but nevertheless, it's perfect. It's got 24 days left. That is perfectly fine. I think it's 24. Yeah. So, but APLD is a great candidate to kind of combat all of the front of this video. It is in a good place to put on your puts so you don't feel you're going to get wrenched if it goes down even more. You're not going to suffer that huge 20% pullback from this point. It's a strong stock. It has high volume. It has a good news catalyst behind it that'll seem to have it running for a long time. It is in a business market that is going to be needed and necessary for quite some time to come. So there are many things to like about APLD, especially that it has a great IV rank. Right now the IV rank is about 50. The IV for any option you want to run is over 100. So you're getting some great premium on that. You just got to be careful with what you're doing. See how it fits into your structure. Maybe you already got enough of that going on. Whatever. But that is a great example of a stock that you can feel safe in getting into from the first part of this video, unless you already have a bunch of other stuff going on. If so, just hold on till you get rid of some of that. If it still looks good to you after that, then you can get into it. Don't get yourself too heavy on one side. Don't get yourself too heavy on these naked puts, and certainly don't get too heavy in selling naked calls ever. So thanks for your time. I appreciate all all of you that come out and hang out with me. Like and subscribe if you wish. And hey, we'll see you next time in Trading in Your Future.